After the big comeback that we've seen since the lows of December, how are you feeling about potential future gains?
Well, Becky, I'm still positively opposed. I'm not thinking, we could certainly have a pullback at some time, but I think we're going to continue to meander higher here over the course of this year, probably setting new all-time highs sometime yet this year. There's some positive catalyst here. Some of the big ones are the revaluation that we've had. We're still selling now at 18 times trailing earnings. We were selling a year ago at 23. The average multiple since 1990 is 19.6. So there's room value-wise. I love the fact that the cavalry has come to the rescue since the collapse in December. We've accelerated the money supply. We've dropped yields across the curve. Overall, fiscal juice as a percent of GDP is 1% more than it was a year ago at this time compared to GDP. And gas prices, even at the pump, are down 20% from their October highs. There's a lot of help now coming for the economy and the markets, I think, that's underappreciated. And then I still think there's a sort of a cautious sentiment. Even though we've had this big rally, I think people are worried it's gone too far too fast, waiting for the correction or retest. And maybe we'll get a little bit of that, but I also think we might continue to climb against that negative sentiment.
Jim, you just talked about a lot of reasons for the market to be up, but you kind of tiptoed around the main fundamental reason that most people would traditionally look at, and that's the economy. Where is the economy headed? Where are corporate earnings headed?
I think, Becky, the economy is slowing quite dramatically, and I think we're going to grow probably close to 2%. Something in that ballpark this year, maybe even a much less than that in the first quarter. And you're exactly right. I think the market is going to be bombarded here by scary, bad economic numbers for much of the first half of this year. And that could lead to another 5% sell-off and talk of recession and the like again. But I think we're going to avoid recession. I think balance sheets are too good, both in the business sector and the household sector. And I don't think the excesses are extreme. So I think we're going to slow but not recess. And the final catalyst for this market this year will be probably sometime as we approach the summer when a consensus decides that the recession is not going to happen. And at that point, I think it brings in a lot more buyers again. And the idea we push recession forecast back from next year maybe to 2021. But I agree.
So we go through this
I don't
whole
expect
dance again?
reports to be good.
We'll go through this whole dance where we say that we've staved off the recession and that's going to be great right around this summer. And then what is it, next year at this time we start to think, oh no, now we're getting closer to 2021 again?
I think that's right. I think to some degree that we probably go higher this year and get to record highs. But the problem is the economy, if it does recover, we're still at sub 4% unemployment. Wages are still climbing, and we're going to be right back to overheat, and Fed will have to tighten again. So I think that'll come back. But I think there's a window here where you could do fairly well in the equity market until some of those concerns rise again.
When you say you think the market will hit new highs, how far from here? Because we've come back a long way.
Yeah. I guess I don't have a hard number there, but I certainly could see this market, getting up, breaking 3,000 maybe this year on the S&P 500. That'd be about a 10% return from where we are today, total return-wise. I think that's reasonable. I don't expect much from earnings, Becky. Earnings could be flattish, but the multiple, if it went from where we are now at 18 to 19, it'd still be below average on current earnings, and we'd have close to a 3,000 stock market. So I don't think that's unreasonable. And if you get optimism in there, it could even go a little bit higher. One thing I'd throw out, Becky, everyone looks at how far and how fast this January rally has occurred, and with the implication that it's overextended, overdone, and set up for a big pullback. But maybe what happened here wasn't the January rallies inappropriate. Maybe it was the December decline that got out of control, and that was inappropriate. It went way lower than it should have. It was a seasonally bad period where a lot of players weren't home in December, and illiquidity was a problem, and maybe it went too low. And so maybe the problem is not January, but December.
Awesome.